Good day, everyone, and welcome to our fireside chat. Today, I'm here with Osman Ahmed. Osman Ahmed is an experienced chief operating officer, head of sales. He's also an angel investor. His experience in product design and management. He's an active angel investor and a syndicate lead. So, Osman, always glad to have a chat with you, and welcome to today's fireside chat.
Likewise, Olivia, pleased to meet you, and thanks for having me on the show.
So today we're going to talk a little bit more about your, I would say, activity as an angel investor, also as a syndicate lead, as somebody has been started in this field of work. So why did you choose to become a syndicate lead?
There were a number of reasons why I decided to become a syndicate lead, and one of them was really around the fact that I was getting quite a lot of good deal flow, and I've got quite a few friends who've seen me getting involved in active angel investments, and then the issue is they all want to be involved, but with ticket sizes of anywhere up from 15, 20, 25, 50k as a minimum entry level. This is a problem for both myself as with a limited budget, and for the friends who would typically be able to invest of, let's say, $1,000, $2,000, $5,000, $10,000 at the top end. And how do you help them diversify their investment portfolio so that they can also have a go at investing in an up and coming startup and having the potential to be able to reap some decent returns? I've got quite a few friends who've seen me getting involved in active angel investments, and then the issue is they all want to be. So becoming a syndicate lead became an obvious choice because it helped me allocate my funds a lot more across a number of different deals, but also giving the opportunity for friends and family who also want to be involved but don't have the capital firepower to be able to invest. And then finally, when it comes to some of these founders, the biggest issue lately has been the whole investment winter. There isn't a lot of capital flowing. And this is one way to actually increase liquidity for those founders who are doing great stuff, but their biggest issue is really around capital, and they don't have the capital to grow.
And I certainly relate to that. I myself have invested in through a few syndicates. It's a little bit of more comfort that I don't have to do directly all the due diligence and coordinating with the startup themselves. So I do think that there is quite some future for syndicate leads. That brings me to yourself as a syndicate lead. So what is your investment thesis? How do you set yourself apart as a syndicate lead? What type of deals do you look at?
I usually look at industries and verticals which I'm particularly interested in and have got some insight into. So, and I'm typically looking at tech-enabled, so businesses that can scale and grow. I won't typically look at the traditional types of businesses which could where you need to invest in people headcount for every time you bring on a new client or a new customer. I'm looking at something which could typically just be scaled and grown through the technology that you've implemented.
What would be the benefits of a angel investor to invest through a syndicate as opposed to going directly and engaging with the startup and putting a ticket there?
I think for an angel investor, I'm more than happy for an angel investor. I find it quite good that they're talking to founders, but typically most angel investors are going to be like me. They've got some capital, and now their big decision is: do I allocate let's say you've got $100,000. Do I allocate $100,000 across 4 startups? And then I have to really do high levels of due diligence on each and every one and hope for the best. Or do I do what most people would typically do and look at, is try and diversify that risk and do smaller tickets across a larger number of startups or investments so that you can handle the risk and handle the downside as well.
I find that angel investing is something relatively new in the region. We have fewer angel investors than, for example, more developed markets, but there are a lot of startups fundraising. So there's a gap to be filled. What do you see? What are the exciting opportunities that you can maybe share that you see in the region for angel investors? And why would angel investors privilege the region as opposed to go in more traditional markets like the US, where startups and firms have a long track records of raising and becoming very big companies.
Yeah, I mean, there are established programs out in places like America and in Europe, and there's nothing wrong with people going out and angel investing in those locations. The problem is it's also a crowded market. You do have tools and platforms that enable small angel checks to be used to fund those startups, and that's great. But the problem is if you're looking to angel invest, it's again deal source. Do you know people in America? Do you know people in Europe? Can you do that additional due diligence over and above what's been shared in a data room? And that's usually the hard issue for most people here in Asia. There is a huge step change in terms of affluence as well, and there are more and more people who have got money that are allocated into traditional investments, but they're wanting to diversify into a higher risk, high reward asset class. And there's more and more of those people here in Southeast Asia, and so the angel investment thesis is becoming one that's becoming more and more accessible, and there are more people doing it, and there's more data points for people to refer to as well. So there's a little bit more confidence here now with people who are keen to look into angel investing as an alternative investment asset class.
Can you share a little bit more about that journey in transitioning and being almost fundraising for these deals as well?
Yeah, I mean, it's one of these really challenging things where it's not just so much the investment that you make as an angel investor. The thing for me is it's my capital when I'm an angel investor. If I lose it, it's my responsibility, and therefore I can live with it. I can live with my own mistakes. And I'm also very conscious of the fact that there are going to be losses and there are going to be winners. And most people don't talk about their losses because obviously you don't want to dwell on them too much, but you don't want to be talking about the failures that you've had. It's human nature not to do that. But for me, transitioning to becoming a syndicate lead, it's having the confidence to be able to tell people that this is the reason why I think this particular deal is good, and being able to articulate that based on these are the mistakes I've made, these are the losses I've made, and this is why I won't go into that particular investment again, or this is why I would validate a particular individual's character. And it's that type of transition that I had to make, because you have to be confident enough to be able to explain your rationale, being able to explain why you think a particular business is good and why it warrants people's investment. And so, yeah, when I'm talking to startup founders as well as potential investors, that's what I'm trying to explain to them. And obviously, as an investment lead, you're dealing with other people's money now, and that's something that you really have to be super conscious of. You can't just glibly say, "Hey, I'm investing, and I'm going to go ahead and do this deal with minimal due diligence." It's going to be something that you really have to be confident about, and that you've done all the hard work and all the graft to get to a point where you can present this to other people, so that they can feel confident that they can invest and at least feel that they've done as much as they can to minimize the downside risk. And that's been the hardest part for me, moving from an angel investor to a syndicate lead. As an angel investor, I can handle my losses, but as an investment lead, I also have to be the bearer of bad news to other people who are potentially like good friends, family, and you've got them in on a deal and it could have, potentially has gone bad.
Yes, absolutely. I think we have to remember that the venture investment is always, well, it's called venture for a reason, right? It's risky. Well, it brings me to another question actually. So, what tips would you give to somebody who's an angel investor wants to start? What type of money should they allocate, and what ticket size should they look at in putting in for example, a syndicate deals? How many should they be doing on a yearly basis? Of course, I assume there's no right or wrong answer to that, but what would be things you would caution against doing for a first-time angel investor?
For me, it's making sure that you put the right foot forward and picking picking the startups that you really understand, really know well, and that you feel super confident about. You know the founder, you know their industry, you know what they're capable of, and that they're capable of executing. As long as you have that conviction, that's like pretty much the hard part done. The next part is really around engendering trust. I've got so many friends who will say, I can be a syndicate lead, and their reason and rationale is because they know quite a few people who have got some money in their bank account, and it's like, that's not the approach that you should be taking. It should be around being able to demonstrate your experience and acumen around being able to select a startup, being able to do the due diligence, and being able to really stand by that particular decision that you've made. And on top of that, you have to be prepared to put your own money into the syndicate. There are a few people saying, "Oh, well, I'll just syndicate this deal and that's it." But if you're not putting your own money in, there's no skin in the game. And then the question is why are you asking other people to invest in a company that you're not prepared to invest in?
Yeah, I fully agree. I think I've seen I know the hard work put in by syndicate leads, and deals are not done overnight, right? It's getting to know, doing the amount of due diligence even before approaching potential investors and saying, look, we've got this deal. Typically, it's been already months in discussion, in negotiation, in due diligence, identifying, whether they are, sound operators, getting already updates from the startup itself, on a monthly basis to see what the traction is, and so on and so forth. Of course, it depends whether it's very early stage or a little bit more later in the game. But yes, as a former lawyer myself, I also know that the legalities, the structure, and everything that takes a lot of time. And this is people sometimes tend to underestimate and think a deal suddenly pops up. There's 1 week to subscribe to it. Usually, this is never really a good sign because it's often a sign of FOMO, right? Oh, this is in the trends and everybody wants to be part of it. But I think good deals and I think the hard work done by syndicate leads like yourselves to establish that trust, to do all the heavy lifting of engaging and doing the due diligence on startups. That's the value really of and it requires quite an element of passion and hard work and commitment. I think from syndicate leads to do that. So that brings me to maybe one of the following question, my last question. So what are we've been talking about deals. Can you share a little bit more about what you're looking at? You might not necessarily need to give a name, but what type of exciting deals have you seen, or maybe have you passed on for X or Y reason in the last few months?
Yeah, I mean, I think I could probably talk about 3 that I'm currently looking at, and they've, and again, this is a learning experience for me as well, because when you have 3 that are all literally close together in terms of time frame, you do the due diligence and then you end up with a paralysis through the analysis that you've done, like which deal should I look at, because most of the people that I'm talking to don't actually have enough money to cover 3 deals, or they might need another 6 months before they feel confident enough to put any more money into another startup. And here I am sat with 3 deals which are all kind of close to each other. One which appeals to quite a few people because it's at a Series A round, and when you get to a Series A, the risk level, goes down. So you're not in a position where this company may fail. It's actually got very good traction. It's doing really well, and now it's looking to raise a round specifically to grow into other markets that they've identified doing the same thing, and that for me. Having met the founder, having visited their operations, knowing what they do, this is something that I've been able to present to people and say this is relatively low risk for a startup investment. But the downside is that obviously you're not going to get the massive multiples at this stage, because pre-Series A usually gives you the chance to have decent multiples in value. And from Series A to Series B, there might not be the biggest uptake, but at least your capital investment is relatively safe. So that's one which I've been looking at, which is originating from Bangladesh. It's a transportation company, and they're looking to grow into the Middle East and the MENA region. The other 2 are from accelerating Asia cohorts, and I can name them because they've been through the program. One's Orco, which is a great founder based out in Pakistan, but they've been doing work with regional players here in Southeast Asia, and they're doing the EV fleet management software. So really riding into the wave of EV fleets, EV vehicles, and being able to impact that. And they've got a great software platform that other fleet managers are adopting because it delivers on specific niches that EV fleets need to have over and above what a traditional like vehicle fleet management software can provide. And then the other one is Hishabi, where the founding team is actually really fantastic. They've got some really great experience from outside of a region, and they've pivoted a little bit, and they've just been on an upward trajectory ever since, and they're really making waves, and they just need the working capital to get things done, and they're doing really, really well. So Hishabi is one of those startups where when you meet the founder, you really like the founder. When you look at the detail and the work that's gone into their data room as well, it's very clear, very well presented. You know, you can drill into all of that, and he can walk you through everything. I've had myself and my syndicate lead partner go to their offices to actually look at their operations and look at their development team and meet them, and it instills and inspires a lot of confidence in what they're doing. And all of these, we hope, will end up creating a huge amount of like upside for any investors coming in. Yeah, but like I said, they're all coming in at the same time. It's like waiting for a bus, and three of them turn up at the same time. And most of the people that we know typically don't have that much capital firepower to be able to deploy into all three at the same time. They'll have to pick one. So we've ended up creating a bit of a problem for ourselves, really, by presenting three opportunities, which we're expecting people to make a decision, and it's hard when you're relatively new to angel investing.
Yeah. I mean, I'm a little bit biased because I'm obviously a little bit. I know at least one of these startups quite well. But yes, let's hope, let's pray that they all these great startups find the funding necessary. I wanted to re-emphasize on and you just mentioned a couple of times, you actually go and see the operations of the startups, do some like physical due diligence on the spot. Again, I just can't re-emphasize how much work that is and commitment on your part to go there, meet them, do an analysis on how the operations look like, and it's not just a paper. It's not just investment based on a forecast and a pitch deck, right? So
Yeah.
I think this is of course, as an angel investor, would never be able to find the time to do that, and this is what's been somewhat outsourced to syndicate leads when one puts a ticket in such a firm.
Yeah. I mean, and just to touch on that, there are quite a few times where we've had. I mean, I've come across this where people have said, I don't want to pay the fee for the syndicate. Why should I pay you, Oz, for this type of thing? And they don't realize that I paid for flights and I paid for a hotel to get out there out of my own pocket, just to make sure that these people, I can say hand on heart, I've done the hard work. I've really checked for you. And it's like trying to say, well, yeah, you've done the hard work, but I don't want to pay for it. Well, yeah, the other alternative is that you can happily go and invest directly in the startup, but that means you have to put more capital down, and most people aren't prepared to do that either. So yeah, there's usually this initial reaction, and this is the problem with angel investing. There's an initial reaction about the fee and the carry, and it's like, why should I pay it, and why should I do that? But then there's a lot of effort that goes into it, and I think the more sophisticated investors realize this, and the more sophisticated investors that we've come across really don't even quibble about the fee and the carry, because they understand that this is a deal that they would never have had access to. And everything is upside for them if it pulls off correctly. So they're more than happy to pay a carry, and they really don't mind, because they've not had to do anything. They've just like trust me, and then if anything comes out of it, then they're really more than happy, and it's not an issue. So we there's some level of education that I have to do, and syndicate leads have to do, to explain the value of what we're doing. But that comes with time, and that comes with over time, people become a bit more in terms of sophisticated as investors, and they begin to realize that it's a necessary part of being a participant in a deal.
Yes, because obviously, I mean, you're doing out of passion, and I know most syndicate leads, initially at least, it's not even, that fee doesn't even cover the time and the costs actually spent doing this. So it's almost, when syndicate leads like yourself, it's a little bit passion, commitment,
Yeah,
desire really to help the startups, but also give good opportunities to the angels. But of course, you can't just do fund that, constantly out of your own pocket just as a hobby. I think there is a path to making it at least sustainable. Um, Osman, thank you very much for sharing all of this. Anything else you want to add? How should our audience reach out to you if they're interested to know more about your syndicate and your investment thesis? What's the best way to contact you?
the best way to contact me is really just find me on LinkedIn. That's the easiest way. The other alternative is they do have a YouTube channel as well with Razi Shah. So if you look up the Clueless Capitalists on YouTube, you'll find our channel where we do interview startup founders, and we do a lot of that. Like you said, it's more of a passion and a hobby, and it's something that we do just because we enjoy talking to founders and understanding what they do. But you can find me through those particular channels, and then you can contact me on email or through the messaging channels on there. And we're more than happy to talk through the deal flow, what we're working on, and the types of specialized theses that we're building out as well. I mean, there's a lot that's going on in the electric vehicle space at the moment, which we're beginning to see more and more deals coming through in that particular area.
Yeah, and let's hope all these startups that are changing the way things are done in Asia, whether it's from electrical vehicles or other type of technologies that would make things more efficient, cleaner, better for the environment, better for growth in general, find the requisite funding. And I think this is where you have a massive role to play in facilitating this. And I'm, fingers crossed, we'll see these deals. It's still a funding winter. It's still harder right now, but fingers
Yeah,
crossed, it's going to pick up again. I do know a lot of startups, and I've not done the amount of due diligence you might have done, but a lot of them look really exciting, and I think in Asia and South Asia in particular, there are really a lot of deals and good value deals. And on top of that, I think that's
yeah,
also something, you can get into a deal at a valuation which would command 10 times the price if it was in the US in another market, just because of the
absolutely.
challenges of certain countries. So that's it for us. Osman, be in touch soon, I hope. And yes, have a good day ahead.
All right. Thank you. Bye bye.
Bye.